Hello and welcome to the April edition of TPN Tax Talks. My name is Gary Dehart. I'm the publisher of Insightful Accountant and Tax Practice News. And our speaker today is Christine Gervais, as always. I don't know why I said today, but our speaker is Christine, who I don't know why she's even here. It is post-tax season, so why is anybody here? So, but if you are here, if you are in the audience, thank you for coming in and joining us on today's talk, which is covering R&D tax credits. And I am going to have Christine just give her own intro. And before we do that, I'm going to get her to go ahead and share the screen, because we do have something I want to make sure that everyone is aware of that's coming up in next month. It's roughly 1 month from today. We're hosting our Future Forward webinar, Future Forward Summit, we're calling it. It's basically a 3/4 day. So it's May 23rd and 24th, runs from like 10 to 4, something like that, where we're focusing on kind of the theme is integrate to accelerate. So we're talking about tech stacks and workflows. Again, that's on May 23rd and 24th. I'm getting way ahead of Christine. I threw this on her very last minute. This is on me. So the driving problem here is on me. It's not on her. But so we wanted to make sure you're aware of this. I'm going to drop the registration link into the chat here for everyone. And it will also be in the follow-up email that you receive that has the slide deck too. So I'm going way out of order here. But there's the link for our Future Forward Summit. Again, May 23rd and 24th. This link will also be in the email that you receive afterwards. You will also receive a link to the recording of this session, as well as a link to the presentation itself, which, did you already drop that in, Christine?
I did, yep. So we got the presentation up there in the chat as well.
Although I think you put it to host and panelists, so.
Oh, okay. Yeah. We'll see if we can't.
Try that one more time.
Re-upload, yep.
All right, it's post-tax season. We're going to blame everything for the next 10 days on post-tax season. Or like we were saying yesterday, it's really, or was it 2 days ago when we talked? It's really not post-tax season anymore. Now it's
pre-extension season.
Pre-extension season. That's the new name for it. So, all right. Well, I'm going to stop talking. Are you going to post that, or do you want me to do it? And then you can.
If you could, yeah, it's not giving me an option to post to everyone. So if you don't mind dropping that, we'll get the slide deck up in the chat for everybody, and then away we go.
Now I will do that, and it is all yours. Thanks, Christine.
Thank you. So yes, very excited for this Future Forward event. If you have not signed up yet, as Gary mentioned, the link is in the chat and it will be emailed out to you afterwards. Looking forward to that next month. If you are here, the exciting part about today is that we are not doing tax returns. So we're coming up for a little bit of air, although we are going to talk about taxes again today. So without further ado, we'll get into our research and development tax credit webinar. Just a really quick reminder that if you want to know when all of our webinars and our training is happening, make sure that you are subscribed to the Tax Practice newsletter that is going to come out on a weekly basis. There's some written content in there for you, as well as our training links to our YouTube channel with previous training. So if there's a topic that you are interested in that you missed out on, you want to go ahead and just scan that QR code. It'll take you right over to the site to subscribe so that you won't miss anything in the future. So if you don't know me, my name is Christine Gervais. As Gary mentioned, I've been a CPA for almost 15 years now, various capacities in terms of serving small businesses and running my own practice. Right now, I do outsource tax and accounting for other firms as well as training. And we're going to talk about research and development credits today. So one of the reasons that this topic came up, especially for me, just in terms of thinking about things that are helpful to all of you, is that this is a credit that I think is really underutilized by small businesses. And I think that's because a lot of us, myself included for a long time, when we think about the research and development credit, I think our brains automatically think big companies, right? Apple is involved in some research and development, and pharmaceutical companies are involved in research and development, but we don't necessarily think about our small business clients. And there was a really big shift towards self employment, entrepreneurship during the pandemic, more people having an opportunity to work from home, using new technology to be able to do that. We've got a lot of startups happening. We've seen a lot of startups in the last couple of years, people running very large retail companies from small spaces. So just kind of keep that in mind. And the idea here is that providing all of you with some education about what you might be missing in terms of talking about the research and development credit with your small business clients is that we have a great opportunity for some value add service here to bring this to them as a great tax planning strategy. So what exactly is the credit? It is a dollar for dollar. It's a credit, not a deduction. So dollar for dollar cash savings for performing activities related to development, design, improvement of products, processes, formulas, or software. So we're going to dive into a little bit more in depth in terms of like, what does that mean? And what are some examples? What does the credit not apply to? It's 20% of those qualified expenses. So in cases where you do have clients that are spending, I usually find the highest cost being labor. They might be paying people to do some research and development activities for them. 20% of that is going to be the calculation for what's available to them for this dollar for dollar credit. So potentially really lucrative in cases where this is a good fit. So now what actually qualifies? We have this IRS four-part test to determine what really does qualify for the research and development credit. And I will let you go ahead, screenshot this, save this. Again, the slide deck is in the chat. It will be sent out to you via email. So now we want to look at this four-part test. Question, was the credit stopped for 2022 and forward? No. So one of the legislation pieces that was passed was to allow for this to continue much further into the future. And we'll talk about companies that aren't making any money in a minute. So you do not need to have a profit in order to take this. So looking at this four-part test, these are the things that are really pertinent to the kind of high level determination about whether or not somebody is going to be a good fit. So, looking at the activity, is it something that's going to be improving upon? And this can be just a process. It doesn't necessarily have to be a product. So, that means how something is being produced. That means improving upon like a manufacturing process. It could be anything. It doesn't need to be a brand new invention if we're looking at it from that perspective of improvement. Typically technological in nature, meaning that there is science, engineering, physics, chemistry, some of those things behind it. Elimination of uncertainty. So this part is a little vague, but it's important that the organization must have faced technological uncertainty when designing or developing the business component. So what that really means is that we're entering into these research and development costs to come to an answer that we don't have at the beginning of the project, right? Like we're trying to improve the efficiency in our manufacturing process and we don't necessarily know how to do that. And so the expenses that go into researching and developing that new process are the type of expenses that would qualify because it's fitting into that uncertainty bucket. So that's kind of what that means. And then the process of experimentation, where we're looking at, okay, trial and error, what's working, what's not working. So these start to give you the feel of what really are the activities that are going to potentially be a good fit for this credit. So again, like I said, screenshot this, save this, look at it in the slide deck in the chat or in your email. This is an important part of starting to figure out who might be doing some of these things. This is also a really great thing to send out to your clients, and I'll talk about that a little bit more in a few minutes as well, about whether or not they want to do some self-assessment to figure out, do we have any activities or expenses that are kind of fitting into these buckets? And if yes, maybe we go down the road of doing a little bit more research to see if this credit is a fit for us. So Joyce, if you scroll up in the chat, it is up above the YouTube page and the link to subscribe to the newsletter. And if you don't see it, the slide deck, no worries, we will send it out to you after the presentation as well. Okay, so let's talk about some examples so that you have some hard and fast ideas of things that you can look for. Development of new software to run a product, costs of researching and implementing green technology, designing and testing, that could be a product or a process, or alternatives to products and processes that a company currently has in place, engineering efforts to develop a new process or product as well, research to address production problems where the solution is uncertain. So that was one of the things that I just talked about. Again, research to address production problems where the solution is certain isn't necessarily going to fit. Launch activities related to a new component or a process. So that one is kind of interesting. And then design or testing involved to improve or reconfigure an existing product. So what's important here is things that the company is currently required to do for existing products or processes. And again, I'll talk about what doesn't qualify in a minute. But when you are looking at things like design or testing, like testing specifically, involved to improve or reconfigure, that's not required testing of existing products. Those types of things would not qualify for the credit. Question in the Q&A, if a company is developing a course to provide, would that qualify? Not necessarily. So we have to, if we just go back for a second to this 4-part test. So we're looking on improving functionality, quality, reliability, performance of business component, meaning product, process, software, technique, formula, or invention. So if that course is not going to be specific to one of these, probably not going to fall into it. Now, I will talk at the end about like training expenses and things like that to actually roll out, or actually here, let's just flip back to our examples. If a company was developing a course to launch new components or processes, then that would be in this category. So launching activities related to a new component or process. But that would mean that the company has incurred research and development credits related to a new component or process. And now we're developing the course as well to then train our team related to launching it. But if it's simply just a class, no, those types of activities don't qualify for research and development. Good question, though. Okay, so moving on from some of the examples that do qualify, what are things that we want to be aware of that don't qualify? So things that really right off the bat, we can just cross off our list. Government funded research. And I already talked about this, ordinary testing and inspection. So that just means like our company's already required to test all of their products in a certain way or inspect all of our products in a certain way. The only time that testing and inspection is going to qualify, again, is if we're talking about that development of something new. Research done outside of the United States, that's an important one as well. So especially if you have a business that operates internationally and maybe they have some supply chain locations outside of the US, research and development activities have to be done inside the US to qualify for this credit. So if you're going to have a conversation with your clients about things that might qualify, that's an important piece to keep in mind. Adaptations done to meet a specific client specification. So in other words, one of your client's customers comes to them and asks them to customize a product in a specific way, and they go through the whole process to do that, does not qualify for research and development in that case. Non-functional product changes such as cosmetic or style changes. So that really is not like adding or creating something new. That's just simply changing aesthetics. Those types of things don't qualify for research and development. So really kind of specific here, we're really looking for something new. That's the general overall feel, is that we are looking to have something be created from scratch. Whether or not the creation comes from bouncing off of an existing product or process doesn't really matter, but the new creation is really the idea when it comes to research and development credits. So FAQs, things to keep in mind. So this is just some tips for you as tax preparers. Credits can be claimed by amending returns for as many open tax years as are available. So you're typically looking at that 3-year statute of limitations applying, meaning you can go backwards 3 years to amendments that are still available and able to be taken. So if you leave here and you go, I do think that I might have a couple of small business clients that might be doing some of these things, and we've never had a research and development tax conversation before, not to worry if it turns out that they do have some expenses that might qualify for the credit. You do have the ability to amend their returns and claim those credits. Something that's really interesting about this credit that is typically uncommon when it comes to tax law is that the business can continue to deduct the expenses related to the research and development, as well as use those same expenses to calculate the credit. So it's extremely rare that we see this situation come about in the tax code. Typically, clients are choosing between one or the other. But in this particular case, say a client has $100,000 in expenses, probably mostly direct labor related to a research and development activity. They can deduct those expenses like they normally would, and that same 100,000 is also used as a base to calculate their research and development credit. So that one is really important as well. This one is very key. And this is where the question that I got asked about, does a business need to be making money? And the answer is technically no. So the reason why that is because credits can be applied to either income tax or up to $250,000 worth of credits can be applied to payroll taxes. So this actually happens a lot of times in the case where you have a startup company. They might be in startup phase for several years prior to actually being able to go live with their product, their software, whatever it is that they might have been working on. During that time, they're paying people, they're paying for their software developers, they're paying for engineers, they are paying all sorts of people to be working on the development of these products, what have you. And those payroll taxes are accumulating regardless of whether or not the business actually has a taxable profit or any type of income tax. So that's where you get up to the $250,000 worth of payroll taxes being a huge benefit that this credit can offset. And yes, another great question in the Q&A, thank you, is that 250K an annual limit? Yes. So credits can be also carried forward for 20 years. So that one is great as well. So again, if you're looking at, okay, well, great, Christine, appreciate it. I have a startup that isn't paying anybody on payroll. Everybody's contractors, so there's no payroll taxes, there's no income taxes. That's okay. These credits can be carried forward for a significant length of time. So presumably your client at some point is going to go live with their product. They're going to start making money, and that 20-year carry forward is going to be able to be applied to future years where they are going to have a profit. So that's fantastic as well. Would you apply the credit on 941 or 940X if it's going against payroll taxes? Yes, you do need to do that. So typically, if you're figuring out after the fact, which happens a lot with the payroll taxes, it's very unusual that you would know, kind of during the year as those quarterly payroll taxes are being filed, that these credits are there and need to be taken advantage of. So it would require amendment of the payroll taxes. Yes, great questions. Partnerships and S corps would typically file 6765. That's the foreign number. If you're dealing with a business that is not a partnership or an S corporation, they're going to typically be taking this credit on form 3800, which is just your general business credit form. So if you're looking for where do I even put this in my tax return, those are the form types that you're looking for to address the research and development credit. So some really important key points here, just in terms of helping your clients figure out how do we take advantage of this. Okay. Now, some tips for you in terms of, okay, how do you walk away with this information? How do you use it to help your small business clients? I would consider which of your clients might qualify for. So you're looking for companies who might be in the tech space, Retail, those ones are easy ones because you're talking about potentially software development, product development right off the bat. Manufacturing is another one where you could have some research and development being put into production processes, things of that nature. So, considering which clients might qualify, those are three really great industries to take a look at if you have clients in those industries. And again, their business size does not matter. So it doesn't matter if they're a startup, doesn't matter if they're a small business, doesn't matter if they're not profitable. These are all things that if they can't help them right now, can certainly help them in the future. And absolutely, even if they're not in a space where they can take advantage of the tax credits right now because maybe they don't have payroll taxes or they don't have income taxes, those are two things that they're very likely to have in the future. And having these credits have been filed and built up over time and available to them when they do become profitable is a hugely advantageous tax planning strategy. So, looking at those types of clients that you might be working with, again, startups working on development of products, things like that, and then maybe just consider having a conversation with them. I think I said at the beginning when we were looking at that 4-part test, I love the idea of just maybe sending out that test to your clients and letting them do a little bit of self assessment and come back to you and say, hey, I think we might have something here. And can we take a little bit more of a deep dive? And then providing some basis education, just really as simple as maybe putting something in your newsletter to prompt them to think about whether or not they are potentially eligible for research and development credits. Sending out a survey to your clients might be another great way to kind of let them do some self assessment and determine if they want to have a deeper conversation with you. So, kind of just putting it out there and making them aware because again, not just us maybe not having this top of mind for our small business clients, but most likely your small business clients also don't necessarily know that this is something that's available to them. So just kind of putting some of those feelers out there to get the wheels turning is a great opportunity for you to highlight your knowledge base. And again, like I said, providing a really fantastic value add service to your clients to bring this to them, especially if it turns out that they're going to get a great benefit from it. And then I highly, highly recommend working with an R&D tax credit expert. There's tons of really fantastic firms out there. A lot of them are national, so you can certainly find somebody who will be very helpful in terms of talking to you. Why do I recommend this if these are certainly things that we can do ourselves as tax preparers? And that's because we are all extremely busy and taking on the added load of now you have all these research and development projects you have to go through. You have to review the expenses. You have to understand the nature of each of them. You have to document each of them properly in order for your client to have a beautiful audit sturdy package of documentation that could be time consuming in some cases. So one of the great things about some of these research and development firms, and even companies like ADP, I know offer a research and development department for their payroll customers, is an opportunity where you could basically help your client to identify the fact that they may have some expenses that qualify, and then you can move them over to an expert that is going to work with them to identify all of those expenses, to calculate their credit. A lot of the times, these experts will actually fill out your forms for you. So they'll give you a completed 6765 or a completed 3800, and you just pop that information right into the tax return. So the way that most of them get paid, and again, these are great questions to ask up front, but a way that a lot of them get paid is they only get paid if they actually help your client to receive a credit. So they'll get paid off of a percentage of the credit. And a lot of times clients like that as well because they're not paying large consulting fees up front for a benefit that they may or they may not receive. So I see a long question in the chat. So I'll move on to the question section. Wayne, really great question. Coming up with an example of how we might be able to claim it in our industry, meaning the accounting industry, like researching a tech stack, developing processes, procedures, creating formal SOPs, documentation, training for our firm. Training our clients, hiring. Yeah, these are really great questions. So again, it has to be something where like if you are involved in software development, So for example, let's say that you really just didn't like the integration from like your accounting software to your tax software, and you worked to develop uh, an API integration that made that more seamless. The expenses that you incurred for that would be considered research and development. Simply researching existing tech stack isn't going to do it for you. Again, you have to look for that new creation component. And simply training your staff isn't going to do it for you either. You really have to be coming up with a new process, like a process that didn't previously exist. Process is usually really more specific to manufacturing because there's processes for production. So it has to be you really creating something new. Great question. But I mean, I have worked with firms that are doing their own internal software development for these reasons to make things more efficient, more productive, more automated. And if those types of activities are going on inside of your firm, then certainly you would be potentially able to take advantage of that credit. So hopefully that helps answer that question for you. Do I expect the rules to go back to the way they were? One of our clients outsources their R&D credit calculation, and the firm believes that laws may be changed. I mean, unfortunately, we all know, without me having to say this, that there's always the potential for the legislation to change. I wish that we had a crystal ball because I think it would make our lives as tax preparers a lot less stressful. But I don't see that on the chopping block anytime soon, especially with the state of the economy that we're in right now. Typically, when we have these sort of periods of inflation and we're looking at potentially a period of recession, things like the research and development tax credits are things that they want to bolster along with investments like section 179 and bonus depreciation deduction, because they assume that those are incentives to put money back into the economy. So that's just my personal take on it. I don't think that that's necessarily something that's going to be going away in the very near future, but of course we just never know. So I'll give it one more minute in case there's any other open questions that anybody wants to pop into the Q&A. I'll keep an eye out for you. And then just really quickly, what are some next steps that you can do? I think we've already kind of touched on some of these, but making a list of clients who may meet these qualifications. Obviously, I would encourage you to just kind of look at it from a high level view. Again, we're all super busy, and there's definitely some efficient ways that you can just pass off this information to your clients. But kind of having a high level view of, do you have clients in your customer list that might potentially qualify for this? And then consider sending them, like I said, a newsletter, a survey, a quick checklist to let them do some self-assessment. And then they can come back to you with some specific answers as to whether or not they think that they may or may not qualify. And you can feel free to use some of the information from this slide deck to help you send out some of those checklists. And then make a connection with an R&D expert, interview them, talk to them about how they work, talk to them about their fees, and see if this is someone that might be a good fit for you to refer your clients to. If somebody does come back to you and say, hey, I think that, we might have some expenses that qualify. What are our next steps? You can pass them off to someone who's going to help them with the nitty gritty without that time having to be taken up on your plate. And then hopefully you'll get a beautiful credit form back and already prepared for you and ready to go into your tax return. And then your client is happy and you're happy, and your R&D tax credit referral is happy as well. So I'll just leave the Q&A open for one more minute in case there's any last minute questions. Or if you think of anything after the fact, feel free to grab my contact information. I will put my email address in the chat as well. And always feel free to reach out if you have follow-up questions that I can answer for you. Or if there's just a topic that you would love to see in next month's webinar, happy to always hear those suggestions as well. And it looks like we're right at 12:30.
Right at it. Perfect. So actually, I am going to throw one more question in there because when you had your 4 points up there, I was like, I'm not sure if this, and this is purely personal, but I think it does fit because people have clients. So we had someone so we use Zoho CRM, actually the whole Zoho One Suite, right? Yep. We had someone who worked on connecting our, basically building a flow or the contract is signed, and then all these actions take place within Zoho CRM. Is that something that would qualify? That type
So
of that's purely internal?
yeah, so it doesn't, yeah, as long as they were actually building something new again, right? So like, so yes, and it doesn't matter that it's just for internal use. You can be building something that's just for internal use. It doesn't have to be something that you're building for sale or for external use, but as long as it's something new. So what doesn't qualify is like, if you were just paying somebody to like use Zapier and connect a Zap to two existing pieces of software, because that's really just someone connecting to things that exist. But yeah, if somebody actually developed code and built out a technical process to do something, even if you're just using it internally, for sure their time, the payroll that you paid to them is potentially available expenses for the credit. Absolutely.
Okay, great info. All right, so and then just excuse me, just one clarifying thing on our future forward that's coming up. Actually, two clarifying things. One, we'll send you a complete information about that in the link. Two, this webinar will actually be taking place as part of Future Forward in next month. So the link that you use for this webinar will not get you to that. We will be sending you a separate registration link, and it's actually the one that's posted in the chat, where you will need to go in and register for that event separately. We'll reach out to you multiple times. So if you can make it, we hope you can. Again, there'll be a total of 8 sessions over those 2 days. You don't have to attend all of them. You can pick and choose, attend the ones that you want, and it's totally free. It's all based on, supported by sponsors. So, and it's not sponsors giving you sales pitches in those 8 sessions. It's people like Christine, who are, subject matter experts giving these sessions. So don't worry about signing up. Don't not sign up if you think you're going to sales pitch, because that's not what it's about. So again, we'll send you the information a couple of times between now and then, and we hope to see you there. Excuse me. Christine, there is one more question that dropped in while I'm.
Yep, I saw that. If you hire a contractor to do development for you, does that qualify as an R&D expense? It does. So the labor would still qualify even if it wasn't someone on payroll. Just obviously there would be no payroll taxes in that situation to potentially apply the credit to. But it's still an expense available for the credit. Yes, great question.
And we will wrap it up on that. Christine, thank you so much. Certainly appreciate it. And I know I'll talk to you very soon. But everyone else, I hope you have a wonderful post tax season. And now, what do we call it? What's our new name? It's actually the
We're in pre-extension season.
enjoy your pre-extension season. So thanks again. Thanks, everybody.
Thank you all.